All right, let's start here, guys. We're going to talk a little bit about trading options with Fib, and I know MTI is pretty active with Fib, so usually I fit in pretty well with you guys, and you guys tend to respond to the content. So looking forward to it. Let's see, how many of you guys out there are trading options right now? How about yes? How about no? How about thinking about it? Or if you're not trading options, what kind of markets are you actually trading? And I'll just kind of watch some of these responses come in. View questions. All right, perfect. All right, let's dive in. So we're going to be talking about some live trading here. You know, guys, this is a game. Obviously, we've got to be conscientious of the capital you're putting out to risk. You can't participate in trading unless you have a full understanding of the money that you're not only risking your overall trading account, but in your individual trades. So that comes with defining your risk ahead of time. Really good to know where your entries are, where your stop losses are, and then position size accordingly so you can fully understand your risk. Okay, so not a lot of options traders. You guys awake out there? I'm not getting much response on text. You guys, how many option traders? Get out that keyboard. We're going to make it interactive fun. Or are you guys all sleeping at this point? Let me know, and I'll kind of structure the presentation based on your answers as we go. All right. Wow. All right. So kind of talking about Fib, you know, it took me my entire trading career. I started trading when I was 18, traded through college, wound up taking my first proprietary trading job when I was 21, actually 22, right out of college. So I'm 37 now, so I've been trading since then. I really got first exposed to using Fib when I was about 25. I worked on Wall Street. I was a senior technical analyst at a major Forex brokerage firm, also trading for the parent company's hedge fund. So I was watching all the research coming through from the investment banks, like from Morgan and Goldman and Merrill and Lehman at the time, and Barclays and Deutsche Bank, and a couple of the guys who, you know, would routinely kind of get ahead of the market and kind of call turning points that other people didn't see were the guys using Fib. So I started to kind of evolve or continue the evolution of my trading in my my mid-20s, but it took me a while to get there. So when I first started trading, I was using Alexander Elder's book Trading for a Living, and that red book, if you guys have ever read it, and it was really nice. He takes you through indicator by indicator, and it got to the point where I would add a new indicator to my chart every time I'd flip a page, and it got to the point where I'd like 6 different indicators on my chart, and I couldn't really even see price action. So I had to evolve, right? I had to start to eliminate that which doesn't work, which got to the point I couldn't even make a trade because all these different signals flipping off kind of gave me paralysis by analysis. So now, guys, I use just enough to be effective, but not too much to be dangerous, and that's called minimum effective dose. So what I like to do is just kind of identify some areas of support and resistance ahead of time using Fib, and then wait for the market to come to you and initiate the trades. So if you still don't believe, and I know I'm going to kind of skip through this quickly because I know a lot of you guys, are using Fib, and again, type in some yeses in there in Fib if you're using it, if you're not using it, or if you think it's voodoo, or do you know enough to be dangerous. Let me know what you guys are where you are right now with Fib. But if you are still with indicators, let's just kind of take a look, and maybe I can show you that indicators kind of put you behind the game here a little bit. So as you move down into Fib support, you test the zone of Fib, and then here's a real simple entry that I can teach you guys today. You buy a breakout above the high of the bar that tests the Fib zone. So this particular setup would put you in the Qs at 104. If you take a traditional MACD entry, a moving average convergence divergence, that's going to put you in at 108 bucks. So you're talking about 108 entry versus 104 entry. That's $4 difference. That's huge. You're giving up tons of profit by waiting for just a traditional MACD entry. So when you give up profit potential and wait for the entry, what you're doing is not giving up profit, but increasing your risk. And that's a big, big problem. This is one particular, and again, I'm kind of preaching to the choir here, but maybe you guys heard this on CNBC. They brought me back. You know, I made a call way back here when crude was at 42 that crude would stop at 26 bucks. And they brought me back and they said, Todd, you know, you were right. You got it within a nickel. And it actually went viral. It wound up being the #1 article on CNBC.com and Yahoo Finance, and my site, like, it went crazy that day. I got a ton of traffic because it literally went viral in the finance world. And really all it was, guys, was Fib. That's all it was just a move down into Fib support. It's just two very specific Fibonacci projection and extension levels that called the low in crude. You guys can do it inside of 30 seconds, and that's what called the low in crude. You know, all these guys spending millions of dollars of research trying to figure out supply and demand and figure out where OPEC is and where the dollar's going. It was just a real simple little Fib support zone. So if you guys don't know me, I've spoken for MTI a couple times. I'm Todd Gordon. I run tradinganalysis.com. I'm a Wall Street dropout. Met my wife Trish in 2008. Our boys Jake and Brody came along. I kind of knew I wanted to be around when they grow up, and so I left Wall Street and run my own business now. So I'll go through this quick. The Donald was there at the wedding reception. This is my best man going through the best man speech, absolutely crushing me like a best man is supposed to do in front of Donald. And him and Melania were there just shaking their heads like, oh my God, like, who is this guy? So Donald Trump knows all my bad secrets that I've done and probably is going to deport me. You guys may have seen me. I've been doing CNBC for about 8-9 years now, and they usually bring me on to do the technicals. That's fast money. And then I run my business tradinganalysis.com from home right now. Okay. Bill, awesome. Did the same thing last week. Last Fib looking for oil to go to 54. Did you get the top? What was it? I thought it was 52 in crude, Bill. I'm just looking at chart. 52 and a half. So you're still looking for 54 then, using Fib. Okay, let's go here. I'm going to kind of skip through this a little bit again. You guys are real quiet. Nobody's really answering me. You guys are a little, maybe I'm not getting you up off of your seats here today, but I'm assuming a lot of you are using Fib. I'm going to kind of skip the pleasantries here a little bit. And 1923 to 1929 crash, the market drops sharply down to 200. The Dow crashes. Where does it stop? The 618 retracement. We bounce up, sell back down, retest, break down again, and then actually we retest as a resistance and break away. So, you know, back here, myth, technicals don't work when markets are highly emotional and technicals are self-fulfilling prophecies. Myths, facts, if you heard that, said that. Well, first of all, the market had never been so emotional. The country was only a century and a half old at that point, give or take, and we've never seen volatility like that, number one. And number two, why did we stop at the 61.8% retracement? It's not that it's a self-fulfilling prophecy and they stopped crashing the Dow because it was a 618 level. Fib won't be applied to the markets for another 50 years. So, you know, just in this chart right there, we can kind of see, wow, you know, there's actually something to these kind of voodoo crazy ratios. Now, I am the first to tell you, you have a really hard time just trading based on retracements by yourself. You've got to combine all the tools of Fib to come up with zones of support and resistance. And that's how you can truly anticipate turning points while at the same time defining your risk. Okay. So it's about anticipating, right? I think when you trade, you need to anticipate, not react. The days of reacting to markets and making money were over 15 years ago. These markets are super complex. There's a lot of, you know, algos and HFTs and hedge funds and market makers and, you know, buy-side traders just really making it very competitive. So you need to anticipate, okay? So it's about trading like a market maker, not a market taker. You need to anticipate trades, and I'll just kind of point this out right here. Anticipating trades puts you in a position of strength. Gee, yes, I do use Elliott with Fib. Yep, but you can trade with Elliott, you can trade with Fib just by yourself. Like no Elliott, no problem there at all. So trading from a position of strength is what we're talking about here as we talk about options, okay? Or just trading Forex, or just trading futures or stocks by themselves, okay? So just to underline this point, you know, if you have Amazon here on the 195-minute chart, we go down, test the Fib support. You know, you get your buy signal here at Amazon about 740, so you buy a breakout above the bar that tests the Fib zone. And then you compare that to your MACD entry, you know, you're going to be at a $7 disadvantage by taking the MACD entry. And then not when the market, not if the market goes against you, when the market retests you. Just think of the position you're going to be in if you have a 740 entry and the market's a couple dollars against you. We're still above support, no big deal, compared to being long up here at like 748 bucks. And all of a sudden Amazon is 12 bucks against you or 13 bucks against you. You're going to be sweating bullets. And you're likely to make a bad decision here at the lows and maybe eject from the trade before we've even broken support. Right? So when you deal at premium entry levels, that puts you in a position of strength. It gives you options. It's a more enjoyable process, okay? So I've heard some objections with Fib. You know, where do you start and stop the analysis? There's all these 1,000 ratios over the chart. What do you do with all this stuff? It's all pretty confusing. I totally agree. Okay, so we're going to be looking at the scroll of Fib that was handed down to us from the 13th century by Leonardo da Pisa himself. Not really, but, and my other bad joke is this is on display in the Louvre right now. So I'm actually taking you through a 6-step process of how to trade with Fib, and then hopefully have some time we're going to really drive home some option trades for you. So the first concept here is this concept of swing waves. All right, and I'm just going to get off the slides and just look at some live stuff for you here. So a swing wave is this. It's a high or low in the market. Okay, so this is crude oil on the 60-minute bar. There's a high bar here with a lower high to the left and a lower high to the right. That's a swing wave high. A swing wave low is a low bar with a lower high to the left and a lower high to the right. Now there's two kinds of swing waves. There's majors, which are blue, and there's minors, which are purple. The majors mean if you have a high bar that is not exceeded in at least 13 bars to the left and 13 bars to the right, then this guy is awarded a blue dot. This is a major swing wave. And then down here at the bottom, we have another blue dot. That means this is a swing wave low, and you can count 13 bars to the left and 13 bars to the right. So it's these swing waves and these dots that appear in your charts that tell you the most significant market turning points. I use these swing waves all the time just to come up with very quick turning points in the market from which we'll base our Fib. Okay, so that's the concept of major and minor swings. Minors are your purple dots with 5 bar left, 5 bars right. Your minors are the purples. Your majors are the blue. 13 bars before, 13 bars following. So that's just the concept of swing waves. Now, the next thing I want to talk about is identifying the predominant trend in the market. Okay, the setup I'm going to teach you for now, only in the 45 minutes we have, is to show you a trend pullback strategy. So we've got to very quickly determine the trend of the market. And I use just a simple DMI oscillator. I really like this guy, Wells Wilder, DMI oscillator. I like to bump the default up to 55. Okay, so I have it on all of my charts. It's an oscillator. If it's green, you're in an uptrend. If it's red, you're in a downtrend. You want to do everything you can to align yourself with the trend of the current market. Right now, crude is in a 60-minute uptrend. Okay, let's take a look. Where are we on the daily? We're also on a daily DMI uptrend. So there's the green oscillator on crude daily. Okay. We can also look at the ADX, which I'm sure some of you are familiar with. The ADX doesn't tell you the direction of the trend, it just tells you how strong the trend is. Basically, the higher that purple line is, the stronger the existing trend. So right now, this is Chevron on a 60-minute. We're in a downtrend. Purple ADX is moving higher, so you have a pretty strong downtrend. Over here, you got a low ADX reading in a blue DMI environment, so you have a weak uptrend because the purple line is pretty low on the scale. Pretty simple. Okay, so now we've got to figure out the right points to start and stop our Fib. Okay, we've got to figure out where the trend waves are and where the corrective waves are, because one of the most ambiguous kind of parts about everyone teaching Fib is like, well, how do you know where to start and stop the ratio? And that's a completely valid point that very few people recognize and address. So you got to find your most recent trend wave. And the way you figure out your most recent trend wave is first identify the trend of the market, which this is up. You then find the most recent blue dot low. Okay, so if you're in an uptrend, find the most recent blue dot low. Then from there, just simply find the highest price following that blue dot. Okay, right now it's a purple dot. We've got 5 bars off to the right. We don't have 13 yet. When that 13th bar closes, that bar will turn blue. But you want to find the blue dot low up to the highest price. That's your most recent and relevant trend wave that you will use later on for Fib calculations. Looking to past price action, we have a oscillator downtrend. So anytime you have a blue dot high to blue dot low, that is a completed trend swing. Blue dot high to blue dot low, blue dot high to blue dot low. That is a completed trend swing. There's 2 swings here. The overall trend is down, but there's 2 trend swings you want to focus on, 1 and 2. You can also use these blue dots to figure out the most relevant corrections. These are going to be very important for your Fib calculations later on. Okay, so we have a blue oscillator right now. We're in an uptrend. You've got blue dot high to blue dot low against the current trend, which is up. Any blue dot high to blue dot low swing, that's going to be a counter trend correction. So there's actually 3 important corrections here: high to low, high to low, high to low. Same thing in Google on the 60-minute on the downtrend. You've got a blue dot low to high and low to high. Okay, that is against the current trend, which is down. So finally into the presentation, guys. Yeah, I'm using Thinkorswim, but you can use this on any software. Finally, the presentation, we get to Fib. Okay, it took me a while to get there, but again, if you're going to reduce some of the ambiguity of it, you've got to understand, what kind of market environment we're in. Are you in a trending environment, a corrective environment, and where the trend starts and stops? So the trend wave that you want to find is going to be in the direction of the trend, which is obviously up. You're going to find the most recent blue dot low to blue dot high. Okay, that's going to be your trend swing that you're going to study to figure out how far your correction is going to go against the prior trend. 80 to 90% of the trades that you put on should be just simply doing this, buying pullbacks to the established trend. There are times where you do want to fight and counter trend trade the established trend, but there's only certain situations that will set up those trades. Okay, so the retracements we're looking at, these are all pretty standard: 3850, 618, and 786. Okay, against the trend. These are your minor retracements. So if this was a move that went from $80 to $90, that's a $10 move. A $5 drop would be a 50% retracement. And you're looking for potential stopping points of this correction to anticipate that the established trend, which is up, will continue. So on Amazon, on the 60-minute, let's take a look at the situation. You've got a blue oscillator. We're in an uptrend. You find the most recent blue dot low, which is there. You drop down, you hit the retracement tool, you click the beginning to the end, and that's where your Fibonacci retracements unfold. Okay, that is the very simple, straightforward way to do Fib. Okay, let me just keep an eye on my time. I believe I'm off. I'm going to get cut off at 2:30, so let me just keep an eye. They're very sensitive about time. So let's just do a quick chart. Throw me some markets that you guys are looking at, some symbols that you want me to take a look at. And we'll do some quick retracements. Ooh, S&P is going, perfect. All right, So we're in a uptrend here on the SPY. Here's the 60-minute. The most recent blue dot is right there. So we're going to go drawings, retracements, high, from low to high. So that is the absolute correct way you draw a retracement, from the low up to the high. And you're looking for the market to potentially pull back in one of those zones. Tesla. Okay, kind of a downtrend in the 60-minute. We've got an oscillator in the negative territory, so you're going to go from the blue dot high down to the low. Tesla. GBP, Sterling Canada. Wow, I haven't looked at one of those in... Is that what you're asking me, Sterling Can, Bill? I haven't looked at that in 10 years, I think. Sterling CAD. Let's see, restore. Okay, we're in a downtrend. You could do it off of this one on a shorter time frame. That's going to be right into the 786. I'd go to a smaller time frame just in the interest of time. I'm not going to. I would go from this blue dot down to that blue dot, and you're going to see we stopped right at 786. It actually looks like it's going to be a nested 786. So what I mean is, yeah, look at that. So we stopped 786 in the purple of the big drop here, and then we sold off from the 786 in purple, dropped down, and then we just did a little smaller test of 786 in yellow. So that's pretty cool. We'll take Goldman, and then we'll move on. I just want to make sure you guys are, pardon me, are cool with this, how to do retracements. The one time, and I'll be completely straightforward, the one time it suffers is when you have one just straight trends here. I hate trading these markets because if you just buy a breakout, you're just like hoping and praying. You're just diving into very dark water, and you pray the bottom isn't 3 feet below the surface. It's really very difficult to control risk on these breakout situations. So Fib is not going to work very well unless you're doing upside projections with Goldman. Okay. Let me just throw some other ones up there. What else am I trading? GDX. Okay, so GDX, obviously gold miners in a downtrend, blue dot high, down to the blue dot low, and that's how you properly draw Fib retracements. Okay, just want to make sure you're cool with retracements. Now let's move to corrective waves. Okay, we just studied a trend swing to figure out how far the ongoing correction is going to go. Now what you're going to do is study the prior correction to figure out where the ongoing correction is going to go. All right, so the way you're going to figure out the most recent and relevant corrective wave is to find the trend of the market, which is up, and then go blue dot high to blue dot low of the prior correction. You're going to take a snapshot of that distance, multiply it by your Fib projections, and project down in the current trend. So, excuse me, project down in the current correction. So you're going to compare this correction to the ongoing correction. So here's the S&P on a 15-minute. All right, we have a downtrend. You're going to look for the most recent blue dot lows to blue dot highs. Those are your corrective swings that you're going to use to study the ongoing correction. So you're going to go blue dot low up to blue dot high. You're going to go blue dot low to blue dot high. You're going to hit the drop down, and I use Thinkorswim, I use Motive Wave, I use eSignal TradeStation. Here's the problem. Most charting softwares out there, software programs, they call these tools the incorrect name. These are not Fibonacci extensions. Okay, these are actually called Fibonacci projections. It creates some confusion, but it's a 3-click Fib process. And anytime you see a 3-click Fib process like this, it's a Fib projection. All right, so just don't get confused by that. That's probably causes a lot of confusion in the world of Fib because people can't agree on one set of names for all the Fib tools. So you're going to click to figure out how far this ongoing correction is going to last. You're going to look at the prior blue dot to blue dot counter trend swing. You're going to click the beginning of this guy first, the end of him next, and then a third time down at the low. Then your Fib projections are going to unfold. this distance, whether it's a quality or one of the fib ratios, will have an impact as to how far this correction lasts. From here, you're going to take the temperature of prior blue dot to blue dot swings to get an opinion of how far this correction should last. So I left the red rectangle to red rectangle. Those red ratios right there correspond to this guy. And then I also did this blue to blue swing. Okay, so this distance right here, 2141 to 53, that distance, which is about 12 S&P points, is exactly equal to this distance. So that's called like a measured move, or AB equals CD, or symmetry, or whatever. You know, there's a bunch of names for it, two-step pattern or whatever. So you're going to get the opinion of two prior and significant corrections to figure out how far this guy's going to go. And remember, the first tool that I taught you was the retracement. And the way you're going to calculate the retracement is you're going to go from the most recent blue dot high down to the absolute low. So with 3 different fib tools on here, a retracement of that trend swing, a projection of that correction, and a projection of this correction, you've now calculated a zone of resistance from 2152 to 2156, a 4-point zone of where the S&P futures could find resistance. And if you're a stock trader or a futures trader, you can either short it, put a stop above the zone. You can scalp it, you know, sell every rip up into the zone, try a couple times to get the right trade. If you're an options trader, you can sell a call credit spread right above the zone of resistance in a high volatility market. If you're in a low volatility market, you can buy a put debit spread or just buy puts. A couple different ways you can do this, but there's a lot of different ways you can handle this zone of resistance. So it's all about anticipating support and resistance ahead of time. And when you anticipate support and resistance ahead of time, guys, that's how you keep your risk low. The best way to become a better trader in a short period of time is by decreasing the average size of your stop losses. I guarantee you that's the fastest way to become a better trader. Sticking with winning trades for longer periods of time, trailing your stop, rolling option positions out, that takes more and more experience. But if you can get better entries, whether you're trading stocks, Forex, futures, or options, you will become a better trader, guaranteed. You will wait for the market to come to you. You will take less trades. You will keep your commission bills down. Commission bills, guys, kill you. I used to be an institutional trader. I used to trade on all the major investment bank platforms, including Goldman Sachs. We used to pay nothing for commissions. All of a sudden, I'm a retail trader. Oh my God, like I've made money trading last year. Last year I made money trading. This year I made trading. I'm up money. This year I'm profitable. I've given back about, I would say, I've paid 3 times more in commissions than I'm up. Not because I overtrade, but because commissions for retail guys are so expensive. Okay, I mean, it's crazy. So we have to trade less frequently, and the only way we can do that is by waiting for the market to come to us. All right, this is a trade I did in GDX. And we have a pretty good resistance. I do these YouTube videos live. Let me go back. I do these YouTube and kind of have fun. So I've got a zone of fib support here in GDX, and I've got a zone of fib resistance up here in GDX. For an options trader, that's really, really valuable because you can buy options here, and then you can also sell options up here into your fib objective, taking some premium less than your cost. Right? So I just kind of traded this thing live. Have a pretty good resistance zone in wave 5. So those of you who are options traders, I did this actually as an iron condor. So I sold a 29.5, 28 put spread, sold a 31.5, 32.5 call credit spread, took in 78 cents. GDX was in a high implied volatility situation there. Executed the trade live. The alert went out to my customers, kind of played through it. And then this was fun. I actually had to go up state to a distillery where I'm an owner. I own a craft spirits distillery. I'm one of 2 owners. And right before, on a Friday, after I was going to work on the still, I booked profits and just kind of recorded it just for fun in in the distillery. So that's just trading it live, made $1,000 on that trade. No big deal. Just all from Fib support to Fib resistance.
Right, he's back for 2 cents.
So, and I'll tell you more about that distillery in a minute. It's kind of fun. GMCR. So we've talked about trend trading, but as I mentioned, you can also counter trend trade with Fib. And there's not many methodologies out there that will allow you to do that. It's pretty awesome. So if you guys remember GMCR, this was a fun trade. The stock had been absolutely getting killed. It was like $160. It dropped down to 40. We went down into a good Fib support zone in GMCR. And then look, earnings came out. The stock gapped up. And I was like, okay, interesting. We held Fib support. It gapped up on bad earnings. They were poor earnings, but the stock still went up a lot. So I put a pretty aggressive options trade on, which is a bear call ladder. Again, those of you who know options, this isn't for everyone, no big deal. You're selling a call credit spread, so I sold a 52.5, 55 call spread, took in a premium, and then paid for a higher out of the money call. Wound up being a net credit of like 5 cents. And the way that works is if the stock goes sideways, I lose the most amount of money. If the stock continues to drop sharply, which was a pretty good bet because it had been getting killed, I would make the 5 cent credit. If the stock moved up enough, you would make a lot of money. So we just so happened that the stock got bought out, and like I had our research customers in, we sent out the alert a week ago. I did a whole video on this trade, and the stock went from 50 to 90. So we had options. The uncovered calls went from 85 cents to like 32 bucks. It was big. So I actually took the profits from that trade, and I helped to invest in the craft distillery. So I took profits from the coffee trade, and I don't know if you guys know this, but craft distilling right now, spirits, is actually in a huge bull market, where craft distilling is really, American whiskey and specifically craft distilling is starting to take market share from Scotch overseas. A lot more people are doing it. So we have a vodka out, we have a rye and a bourbon, but it all started from a coffee trade. So it's kind of fun. So again, what we're talking about here, guys, is just not reacting to indicators, which I think really puts you behind the 8 ball, and it forces you to take more risk on a trade because you get less than optimal entries. Right? So it's about anticipating areas of support and resistance ahead of time. Execute the trade with a very tight risk. If the trade gets stopped out and we go up through the zone, I take the stop, no problem, no big deal. But if it works, it should be relatively enjoyable and comfortable process. I'm a trader. I take stops. I take losses. I'm a trader who tells you, I just don't tell you all is well in the world, and it's your fault that you're not making 10,000 pips a month. Trading is a street fight. It's a boxing match. You're going to take some shots. You're going to give some shots. It just depends on how much you want it, how hard you work at it, and you just got to realize you have to pick yourself off the mat a couple times and then try to win the decision at the end of 12 rounds. That's the reality of trading. GE, we like quality better than the mass-produced crap. That's exactly it. People are paying for it too, for the quality. It's all handmade. It's organic. It's all made in New York. It's up in Saratoga, where I'm from. So yeah, it's fun. It's fun. It's just, you need a diversion rather than just chasing markets all the time. So it's about a game plan. Okay, let me just switch over here. It's about having a game plan. Like I said, it is strikes. Let me just do this. I got to adjust my one slide here for you. Yeah, it's kind of fun. You actually go up there and make something. It's get something with your hands. You get a little dirty. Okay, let me just get back here. Okay, so again, it's a game plan, right? It's not haphazardly chasing price, selling lows, buying tops. It's about having a game plan. And as I said, Tony Robbins, anticipation is the ultimate power. Losers react, leaders anticipate. And don't forget, Tony Robbins is on the payroll of, in my opinion, one of the best living hedge fund managers who's worth $3 billion, Paul Tudor Jones. Tony Robbins is Paul Tudor Jones' head coach. And fact, Paul Tudor Jones is an Elliott Wave and Fibonacci guy. Fact. He wrote about it in Market Wizards. Number two, my old boss worked for Tudor, and Tudor would talk about Elliott and Fib. If you guys don't know who Paul Tudor Jones is, definitely check him out. So if you want, guys, I have a nice course that's all packaged up for you. Those of you who are interested in options, precision time your options trade using Fib. Really nice kind of approach to Fib if you're new, and then if you're new to options as well, definitely better way to go. I find that it's just, it gives the trader a lot more chance for success than outright having to call a direction every single time. There's times when it's better to sell options away from, above resistance and below support, and it gives the trader a better edge, I believe, rather than having to be directionally correct all the time. It's very difficult to trade the underlying Forex, futures, or stock market, having to be absolutely correct in direction every time to make money. There's a buffer. There is, you don't have to be so precise with options. You have to be right with the time. There's ways to come around it, but it definitely, I found that my performance as a trader has increased with options. I could trade anything I want. Okay, so I love applying Fib to the options market, and so if you like, here's what we can do. Show you how to do the Fib support and resistance zone, my 4 favorite Fib price analysis tools, my complete approach to Fib time, how to set up your ratios and all the different charting packages, entries, stops, targets, how to use credit spreads, how to use debit spreads, never guess what to do next, and how to avoid head fakes. Plus, I traded live. Okay, once the content was delivered, I traded 3 live analysis sessions. I literally set up trades with you live, talked to the customers along the way, and then reported back, how the trades went. We opened trades live, we closed trade lives, we had winning trades, we had losing trades, a lot of transparency, which is key in this business. GE, you got that right. So if you guys want to go and figure out how to kind of approach options with Fib, it's a course that I've done very well with, very proud to put in front of you. It's, it's really about trying to find a turning point in the market that others can't see. Too many people approach the options market in that they try to hide from direction. Okay, there's some big options education firms out there that say, you don't need a chart to trade, and you should be able to just trade options without acknowledging what the underlying market's doing. That's wrong. You need to be able to trade the underlying market first, and then options can enhance. Options give you a cushion. Okay, if you're trading just Forex future stocks, you have to be right on the trade or you lose money. It's not always the case with options. There is a cushion, and it's a cushion I like to sit on a lot. It is not the Holy Grail. You won't be on your yacht with the Wolf of Wall Street by March. It is to give you an edge in the market, and that's it. We do 100% money back guarantee, no questions asked, very, very competitive price. So here's what we're doing. If you want to get involved in this course, it is tradinganalysis.com/strike, S-T-R-I-K-E. Here's what you get: the 4 tools of Fib price, 3 tools of Fib time, option strategy selection tool. I show you how I go about selecting the appropriate strategy. Stop loss and stop trail plan. You get the checklist and cheat sheet, profit taking plan, 3 live trading sessions, plus you get the purple and blue dots, the swing wave indicator. I have it built for all the major charting packages. Here it is on Thinkorswim. So it's 13 bars on the major, 5 bars on the minor, and you can even set up the colors that you like. So altogether, it's worth over $1,200. For MTI, we do it for $197, but because we're coming into the end of the year, we'll do it for 97 bucks. Okay, so tradinganalysis.com/strike. Okay, oh, and there we go. Renee threw the question or the URL in there for me. Appreciate that. Pardon me. And this is perfect that we're at 45 minutes because my voice is starting to go. So this is some of the unsolicited feedback from the course. I didn't ask people for feedback, but this is what they wrote Phenomenal material and explanations, best investment of time ever for options trading. Learn more than a few hours in waiting through several days of study, much more to absorb from reviewing the archive. Thanks for investing your time and energy. 10 years of experience. It's more like 15, but that's okay. Good stuff, great class. When we're doing live sessions, I love it. A lot of insights. You're awesome. Hi, Todd. I had my doubts earlier. I didn't know how to find fib time extensions in projections and toss, but you cleared my doubt or inability. Best explanation of delta I've ever heard. Thank you. Got it. Making the Greeks make sense. Not overly complicated. Light bulb moment. Got it now. Awesome stuff. I'm really enjoying it. So that was really nice feedback from the team. So this is the class. You'll have access to it obviously immediately. If you purchase, you'll get an email with login access. It works with any markets. It's yours to keep for at least 61.8 years. And this is when the course actually occurred. Tradinganalysis.com/strike. How about some questions? Markets you want me to take a look at? I think I have probably a couple minutes. And we can just look at some markets, maybe set up some trades. I'll show you live trades I have on now. So again, tradinganalysis.com/strike will get you done. You guys have some markets you want me to take a look at? Let's see here. And I will set up some trades for you in the 2 minutes I have. Actually, you know what? Let's do this. Trade. So I have an SPY trade on right now. I have altogether I've got a 220, 219 put spread. Okay, so I'm short the 220 puts, long the 219s. And then I also have a 224, 225 call credit spread up top. So this is a bullish trade. I've got positive 114 deltas, which means for every dollar the SPY moves up, I'll make $112. I'm theta positive, which means if I'm right directionally, I'll make that $113 per $1 move in the SPY. That also make $33 a day in time decay. And I'm short volatility. And the reason I'm doing that is, where's my motivated chart? Let me just pull this down. Let me just show you my fib chart here. Okay. Configure preferences. Right. Apply. Okay. All right. So here's the SPY. Working nicely. So I do use a combination of Fib and Elliott. So the SPY had a really nice ABC move down. This right here, this is the 38% retracement of the most recent blue dot low to blue dot high, right down there. Then we did an ABC pullback, okay? I'm also comparing the distance of the prior correction to this correction, okay? So we have a nice little zone of Fib support there. On top of that, we could do a Fib projection of this swing and this swing. And this software just does it for you automatically. It's pretty awesome. Okay, so we had support down into 219 to 218. I also have a bunch of Fib resistance in terms of a wave 5 target between 223 and 226. So I have a trade here. I have a trade plan. I think we're going to hold 220 and go to 224. So that's why I sold the 220 puts, bought the 219s against this support. I thought we would not break through 219, which we didn't. And then we shouldn't really go too much above 224, so that's why I sold those calls. 224 is right in the middle of the wave 5 upside target. So Elliott and Fib go beautifully together. You don't need Elliott if you just want to trade Fib by itself, but the two go very well together. So for options traders, it's a really really nice package. So for 97 bucks. All right, so that's the offer, guys. Hopefully you want to get involved. It's about, I'd say about 15 hours of total content for less than 100 bucks. And you get a lot of content. You'll have a login. You get to the course homepage where you can download all the course materials, recordings, PowerPoints, and the swing wave indicator, which is built for all the major charting packages like We have a bill for TradeStation, Meta, MotiveWave, eSignal, Thinkorswim, Ninja. What am I forgetting? What other charting packages am I forgetting? TradeStation, eSignal, Motive, Meta, Thinkorswim. Okay, I think that's going to be it. All right, perfect, perfect. All right, guys, appreciate that. I know I'm over, and I know MTI wants to keep it tight, so guys, I'll leave it there, and hopefully you take advantage. And if you have any questions at all, please just text us or email us info@tradinganalysis.com, and I have a team standing by. You can also call us at 855-WIN-TRADE.